Yeah, hi, good morning guys. Mike here, Global Investments. I hope everybody's doing well today. Monday morning, just starting the week off. I just wanted to talk about today leveraging borrowing money, the stigma around it, not stigma, but especially with interest rates being as high as they are right now, why should we borrow money? If you've got cash available in the bank and you can buy one house outright and get the cash flow coming in, get the rent coming in, why should you look at borrowing money? So I just wanted to look at that scenario for you guys this morning. So I wanted to take two examples. Now, so I'm going to take an example where we have a client with $100,000, so $100,000 cash. What could you buy with that $100,000 cash? Well, you could potentially buy, let's say, a renovated duplex in Cleveland, off me, fully renovated, Section 8, ready for tenants to be placed. What would it rent for? So let's say that property would rent for, let's say, $2,500 per month, which is $1,250 per unit, which is about the market rate right now for a fully renovated, decent location duplex in Cleveland. So $2,500 a month is, let's say, $30,000 per annum. So that's your gross rent, $30,000. So let's take scenario number one. You're buying the house cash. So what do we need to look at? The only running costs that you will have would be your management, your tax, and also your insurance as well. They're your three main running costs when you're looking at buying a house cash. There's no mortgage payment because you're buying it with your liquid cash that's available. So let's say, for argument's sake, well, number one, your management fee would be 10% of the gross rent. So you'd be looking at $3,000 per annum, or $250 a month, 10% of the gross rent, guys. Insurance would be around about $800, and your tax, for argument's sake, let's call it $800 as well. So your net rent, your gross is $30,000. So we take off the $3,000, which is your management, your tax, which is $800, and your insurance. So that leaves you with a net figure of $25,400. Why do I need to borrow money? And what's the benefit in me borrowing money, even at 8 or 9%? So, especially when you look at those numbers there, we have a house for $100,000 and your net rent is $25,400, excluding vacancy and maintenance, guys, because we don't know what they are going to be. So that is a 25.4% net return on your cash in. Wonderful, 25% net. Why do I need to borrow money? Okay, let's look at scenario two. Scenario two is, instead of buying one property, we buy two properties. Properties are the same price, so we're investing twice as much money as a gross figure. So we're $100,000 and $100,000. Yeah. Instead of paying cash, we're going to borrow, we're going to leverage, we're going to lend money from private lenders, banks. We have a fantastic in-house finance department, Christine in Miami, who works for the mortgage shop. She can get 70% lending for overseas buyers and 80% for domestic clients. Fantastic. But let's look at the 70%. Let's forget about the 80% because that makes the numbers even better. Okay, so both houses are going to be the same because they're both the same price, guys. Yeah, so I'm just going to double the figures at the end. Okay, so house number one, house number two, both $100,000. Your cash in, now remember, when you borrow money, you're going to have additional fees. You're going to have a little bit more legal fees. You're going to have underwriting costs and so on. So your cash in with Christine at the mortgage shop to buy a house for $100,000 is around about $36,000. And that's with a 70% mortgage. Okay? So again, remember, we have the two houses, both $100,000, $36,000 each in, which is a total investment or cash outlay for you guys of $72,000. Yeah? So you're not even spending, we could maybe take it to three houses, but I'm not going to, we'll leave it with two. So your cash in is actually less money, it's $72,000. Okay? So let's remember that, yeah? Now, the great thing is you're buying two houses, the rents are going to double. So you have $2,500 here and you have $2,500 here. So that is a gross rental of $60,000 per year. Okay, so what do we have to think about here now? We have to think about, number one, you've got two houses, so you're going to have two sets of running costs, and you're borrowing the money, so you're going to have mortgage payments as well. So let's have a look. Let's have a look at those payments. So number one, $60,000. So I'm gonna bundle both of the houses up now. So we have $60,000 rent. Your gross management is your gross rental is $60,000. 10% is the management of the gross rent, which is $6,000. So that's your first cost. Then you have your two property taxes. So remember we said $800 on the first house, so that's $1,600, and your insurance would be doubled as well, so that's $1,600 as well. Now let's come to the mortgage repayments. So that's the big one. So even at 8.4%, your mortgage payment is $528 per year. Okay, so that is a gross total for your mortgage of $6,336. Okay, so remember, we're taking off $6,000 off the gross rent for the management. We're taking $1,600 off for your tax. We're taking $1,600 off for your insurance, and we're going to take off around about $12,760 for the two mortgage payments. So you can see all of those figures here. That gives us a net figure per property of $19,064 per property. So your net rent for both properties is $38,128. Okay, so you remember scenario one, where we had $25,400 on a $100,000 investment, which gives us a 25% net return, excluding vacancy and maintenance. Fantastic. Okay, so I wonder what scenario two is going to look like. So scenario two, we have invested $72,000. Remember, that's with all of your underwriting, all of your legal fees, so you still got $28,000, if my maths are correct, in the bank, left to invest or to save or whatever you want to do with it. But your net rent is $38,128. So let's do the maths again. So what is my net return using less money in scenario two, buying two properties, two rents, two running costs, two mortgages? Well, here it is. So your total investment is $72,000, and your net rent is, let me have a look here, $38,128. So 72,000 in, that's your cash in, guys. And your net rent is $38,128. Well, those figures mean that, number one, you're spending less money. Number two, you've got two houses, both growing in value as well, because the likelihood is property prices are going to go up over the next 5-10 years. But your net return, instead of a 25% return in scenario one, we have a 52% return in scenario two. And guys, that's where leverage and that's where lending comes in, and that's how people can build wealth, build property portfolios, and really get their money working for them. And I know, we always think cash is king, and I was brought up in that way as well. If you can buy something outright, don't borrow money, don't do this. Why not? Use other people's money. And that's both that scenarios. That works. I can show you that in another 10 different ways. But it works every time. By using the bank's money, you're going to get your money working better for you. So ask yourself the question, if you have $100,000 to invest, and you can invest that money and get a 25% return or a 52% return, where would you put your money? Well, I know where I'll put mine. Anyway, guys, I hope that helps. I think leveraging is great. We've got a fantastic finance department, like I said, based in Miami, Christine. And if you guys like the sound of this, like the idea of this, and you were sitting back thinking, I'm going to buy one house cash, and now you're open to that idea, if you'd like us, we can set up a call with the mortgage shop, with Christine, with Pablo, with Audrey in Miami, and they can talk you through the specifics. Obviously, I'm not a mortgage advisor, so you need to speak directly to Christine. But listen, guys, I hope you have a great week. We've got some great houses this week in Cleveland, Detroit. We're looking at St. Louis again, guys. But if you need anything, drop us a text, give us a call, drop us a WhatsApp, and you guys have a great week. Speak soon.